KLA dropped 5.4%, and everyone is panicking. But KLA just sealed a TSMC agreement for its AIMS2 platform, guaranteeing a 2-year supply pipeline. That contract secures immediate revenue and cements KLA as the lithography metrology backbone for TSMC's most advanced nodes. But the lab score is 72 out of 100. Why? Here's why the sell-off is wrong. KLA's metrology, the science of measuring microscopic wafer features, is a competitive strength, securing 99% yield at sub-5 nm nodes. Without KLA's e-beam, electron beam inspection tools that find defects smaller than light waves, advanced packaging yields collapse. While applied materials struggles with optical inspection limits, KLA's AIMS 2.0 platform measures features down to single-digit nanometers. This engineering moat guarantees KLA is the sole gatekeeper for TSMC's upcoming 3nm N3E process node. We are tracking a physical bottleneck here. Even minor defects on a 300mm wafer destroy entire batches of high-bandwidth memory. Today's 5.43% drop to $242.49 reflects institutional profit-taking, not a breakdown in KLA's physical silicon dominance. Quarterly financials showing modest revenue momentum for KLA. By Q3 2026, tariff uncertainty will compress KLA's gross margins by 150 basis points, hundredths of a percentage point. The macro wave is shifting from acceleration to friction. With the Federal Reserve rate at 3.63%, capital costs are squeezing global foundry expansion plans. Meanwhile, Kalsher prediction markets price U.S. recession risk at 7.4%. This macro slowdown hits KLA just as trade wars reignite over Greenland. New tariffs threaten the physical supply chain of specialized optical lenses. Furthermore, export controls restrict sales of advanced e-beam, electron beam inspection tools. This policy friction directly threatens KLA's high-margin Asian revenue streams. Despite strong TSMC May revenue of 417 billion new Taiwan dollars, KLA faces massive geopolitical headwinds. The policy tide is turning. KLA reported earnings per share of $9.40, beating the Wall Street estimate of $9.32 by 0.8%. A solid beat that signals strong execution. KLA is trending higher, currently at $242.49. KLA's management is selling a story of ecosystem harmony. We are an ecosystem, and it takes all the parts of the ecosystem to make it happen. That phrase, repeated 3 times in the Q&A, is designed to make you feel the AI chip boom is a smooth, synchronized ascent. What it's designed to make you not think about: who's actually holding the bottleneck. The lab decodes the signal. Zero insiders selling in 90 days. Unusual for a stock up 45% post-split. EPS beat streak averaging plus 1.8% surprises. Yet R&D spend is contracting as a percentage of revenue. 11.2% this quarter, down from 12.1% last year. That's not conviction, that's margin protection. The engineering reality check. KLA's yield tools are critical, but the real constraint isn't equipment, it's fab shelf space. The momentum breakdown for KLA. RSI sits at 69, pointing to bullish momentum, with buyers in control. MACD is currently bullish, with the histogram crossing above 0. KLA's TSMC deal for AIMS 2.0 metrology, the science of microscopic chip measurement, secures dominant revenue. But here's what breaks the bull thesis. U.S. export controls could block $600 million of Chinese orders. Can domestic CHIPS Act funding offset this loss? No, local supply contracts cannot match China's high-volume tool utilization rates. Our June 11th buy call at $2,322.77 was mistimed, as the stock has dropped to $242.49. If KLA secures Chinese export licenses by Q3, the stock will retest resistance at $256.42. If licenses are denied, expect a drop to support at $174.06. Our AI score of 72 reflects high conviction in a near-term recovery. Here's the macro picture shaping KLA. U.S. export controls now force KLA to secure a license before shipping its 3D AIMS and E-beam inspection tools to any Chinese fab, curbing sales to SMIC and Huawei-linked customers. The CHIPS Act's $52 billion incentives lift domestic orders, while Taiwan Strait risks make TSMC and Samsung prioritize on-site service contracts, tightening KLA's supply chain exposure. AI accelerator and high-bandwidth memory, HBM, growth is spurring demand for KLA's AMS 2.0 and E-beam CDSEM platforms, critical for sub-5 nm node yield. At the same time, the shift to advanced 2.5D/3D IC packaging fuels orders for KLA's CD Pod and Oasis inspection tools, anchoring the company in the next-gen chip stack. The biggest upside in the next 3-6 months is KLA's newly announced multi-year supply deal with TSMC for AIMS 2.0 metrology on its 5 nm and upcoming 3 nm lines, which could lift Q3 revenue 810%. The chief downside risk is a sudden tightening of U.S. export licensing that would bar KLA from servicing Chinese high-volume customers, potentially stripping $600 million of booked orders. Today's top signal, KLA's 18% earnings beat fuels a strong buy. Is KLA Corporation a buy at current levels or a trap? Let's hear your thesis below. We're not offering financial advice. This content is educational, and you should conduct your own due diligence. Remember, past performance is not indicative of future results, and any investment carries risk. Market conditions can change rapidly, and outcomes may differ from expectations. Subscribe now for deep dive analyses that cut through the hype. If you want our full breakdown on Xanadu, the link is in the description. Stay sharp, and see you next time.